Good morning, students. How are you all? Hope you all are fine in your houses. Good students, shall we come back to our lesson? In fifth lesson, the admission of a partner, we have studied about the distribution of accumulated profits and reserves to the old partners in the older ratio. Okay, the next adjustment is revaluation of assets and liabilities. Okay, assets and liabilities must be revalued, and we have to prepare a revaluation account. Okay, it should be credited with the profit items and it should be debited with the loss items. What are the profit items? Any increase in the value of asset and decrease in the value of liabilities. Loss items, decrease in the value of asset and increase in the value of liabilities. Any liabilities not recorded also will be a loss item. Any asset that is not recorded will be a profit item. So by preparing the revaluation account, we can transfer the profit on revaluation to the old partners in the old ratio. We have completed the fourth problem. Now we will see the fifth and sixth illustration and the exercise. Okay students, now I will show you the fifth illustration. Okay, see fifth illustration. Sriram and Raj sharing profits and losses in the ratio of 2:1. Nelson joins as a partner on 1st April 2017. The following adjustments are to be made. Increase in the value of stock. Okay, it is profit item. Then bring into record investment of 7,000 which had not been recorded. This one also profit item, isn't it? Then reduce the value of office equipment. So asset decreasing, loss item. Then provision would also be made for outstanding wages. So this also loss. So 2 profit item, 2 loss item. Give journal entries and prepare revaluation account. First journal entry, that profit items. Okay, stock account debtor, investment account debtor to revaluation account. Increase in the value of stock and unrecorded investment accounted. Okay, amount written. Then loss item, revaluation account debtor to office equipment and to outstanding wages. Okay, we can see the loss items recorded, that profit items recorded. Then we have to prepare the revaluation account. Okay, that loss item on the debit side, profit item on the credit side. So here loss is more. So loss on revaluation transferred to Sriram's capital account, Raj capital account. Okay, in the profit sharing ratio 2:1. Now this should be entered as in the journal entry. Okay, Sriram's capital account data, Raj capital account data to revaluation. Loss on revaluation transferred. Okay, now shall we see the fifth problem. See, Seenu and Siva are partners sharing profits and losses in the ratio of 5:3. In the view of Kausalya's admission, they decided to increase the value of buildings. This profit item. Then to bring into record investment 10,000 which have not so far been brought into account. That is also profit. Decrease in the value of machinery and furniture. This loss. Then write-off sundry creditor. This one profit. Okay, 3 profit and 1 loss. Give journal entries and prepare revaluation account. Okay, now we will first prepare the journal entries. Okay, first write the number. Okay, 5. Journal entries. Okay, date, then particulars, LF, debit, credit. Okay, rupees. You have to write fully. Okay, date. Date not given. Okay, so no need to write. First one, the profit item we will write. Okay, to increase the value of building. So, building account debtor. How much? 40,000. Then bring into record investment. Okay, investment also debit. $10,000. Then decrease in the value of machinery and furniture, loss. Now write off sundry creditors. Creditors is liability, that is reducing. Okay, so it is in that profit item. Okay, sundry creditors account. Debtor 16,000. To revaluation account. How much? 40, 50, 66,000. Okay. Profit items recorded. Now second one, loss. Only C alone. That one, we have to debit the revaluation account. Okay. On debtor to machinery. Machinery account 14,000. To furniture account 12,000. So total 26,000. Okay. Loss items recorded. Now we have to leave space. Okay, so I am using in this way. Okay. Revaluation account. Okay. Revaluation account. Now first one, building account debtor, that is revaluation account credited. Oh, okay, so credit side we have to write. By buildings 40,000. By investment 10,000. By sundry creditors 16,000. Now next entry, revaluation account is debited. So debit side to machinery account 14,000. To furniture account 12,000. Now this side only we have more, isn't it? 66. So write that one. Here also the same amount. The remaining here 26, isn't it? 26 deduct from 66 we will get 40. So we can write to profit on revaluation transferred to the old partner. Sino's capital account then Siva's capital account. Okay, inner column we have to write. Okay, this 40,000 should be shared. we want to calculate. 40,000 into, what is the ratio? In which ratio? 5 is to 3. So 5 by 8. So you divide this one. 8 one time, 5 times. Then 5,000 into 5, 25,000. Then for the other person, 3, 15,000. Okay, 25,000 and 15,000. Total 40,000. Okay, now we have to write the journal entry. Okay, after calculating the profit. Revaluation account debtor to Sino's capital account to Siva's capital account. Profit and revaluation transferred. Okay, here total amount 40,000. Here 25,000. 15,000. Okay, fifth exercise we have completed. Now we will see the sixth illustration. Sixth illustration you see. Raghu and Sam are partners in a firm sharing profits and losses in the ratio of 3:2, their balance sheet given. Okay, machinery, furniture, stock, debtors, provision, bank. Here capital, creditors. Prakash is admitted on 1/4/2017 subject to the following conditions. He has to bring a capital of rupees 10,000, then machinery valued at 24,000. Here you should be very careful. Here 24,000, already machinery 30,000. So it is reduced by how much? 6,000. Okay, loss item. Furniture to be depreciated by 3,000. Okay, here by means 3,000. Okay, loss. Here don't write 24,000 because at 24,000 they are already at 30,000 there. So the difference 6,000 only decreasing. Here by 3,000, so no problem. Okay, till now we have got that one only, by. Then provision for doubtful debt should be increased to 3,000. Already we have 1,000. So how much is increasing? 2,000. Okay. Unrecorded trade receivables. It is one asset. Okay, that is profit. What under they have asked? Pass necessary journal entries and prepare revaluation account and capital account of the partners after admission. See the journal entry. Bank account debtor. First one to bring capital. Bank account debtor to Prakash, capital account. Capital brought by Prakash. Then loss item. Revaluation debtor to machinery. Then furniture. Then provision for doubtful debts. Okay, loss items recorded, we can write. Then, trade receivable profit item. Okay, to revaluation profit item recorded. Then, we have got, now we should prepare the revaluation account. Here, loss item only more. So, credit side by loss on revaluation transferred to Raghu's capital, Sam's capital in their profit sharing ratio. Now we should prepare this entry. Okay, here Raghu's capital account debtor, Sam's capital account debtor to revaluation account. Now capital account also. Okay, this too what is given in the balance sheet by balance brought down. Here after admission only they have asked, that's why we have to include one more column for Prakash. Okay, now by bank. He has brought capital, so 10,000. Now, revaluation loss, capital account debited, isn't it? So, capital account debtor to revaluation account. Now, you find out the balance. Then, by balance brought down. That's all. Okay, now shall we do the exercise 6. Sai and Shankar are partners sharing profits and losses in the ratio of 5:3. The firm's balance sheet given capital, creditors, outstanding wages, building, furniture, investment, debtor, provision for bad debts, bills receivable, stock bank. 31st December 2017, Shanmugam was admitted into partnership for 1/4 share of profit with 12,000 as capital, subject to the following adjustment. Furniture is to be revalued at 5,000. Already how much there? Furniture 6,000. Okay, so it is reduced by 1,000. So 1,000 only loss item. Building is to be revalued at 50,000. Here already 34. It is increasing by 16,000. So profit 16,000. Then provision for doubtful debts increased to 5,500. Already 3,000. So 2,500 increasing. Unrecorded investment 6,000. So this one profit. Unrecorded liability, that is loss. Pass journal entries, prepare revaluation account and capital account of partners after admission. So first we have to prepare the journal entries. Okay, first write the number 6. Journal entries. Okay, date, particulars, LF, debit, credit. Okay, first furniture loss, isn't it? So that we will record all the loss item. Okay, first one, furniture account debtor. Sorry, loss item, you have to write the revaluation account debtor. To furniture. All the loss item we will enter. Okay, building profit, leave it. Okay. So, provision for doubtful debts increased. So, to provision for doubtful debts. You write fully. Okay. Here, furniture how much? 1,000 only. Decreasing. Okay. Provision for doubtful debts increased to 5,500. Already we have 3,000. So, 2,500 only. Increasing. Okay, liability is increasing. Then unrecorded liability. To unrecorded liability. It is also loss. How much? 2,500. So total 6,000. Okay, so loss items recorded. Okay, then profit items. Okay, here we have to write those assets. Profit items first. Okay, first one, buildings account. Building account debtor. How much? Revalued at 50,000. So already we have 34. So 16,000 only increasing. Then next one, D, unrecorded investment. So investment account debtor. Investment how much? 6,000. Okay, we have entered now everything, isn't it? So 2, revaluation account. So how much? 22,000. Okay, profit items recorded. Okay, now we have to prepare the revaluation account. Okay, shall we prepare here? You can use 2 pages. Okay. I cannot accommodate within this cell, in the cells. Okay, that's why I am writing here. Revaluation 2, you will divide this one into 2. 2 furniture, 1000. 2 provision for doubtful debts, 2500. 2 liability, unrecorded liability, 2500. Credit side, buy building, 16,000. Buy investment, 6,000. So here 22,000, here 6,000. So what is the profit? 16,000, isn't it? So we will add it. $16,000. So we can write it to profit on revaluation transferred to. Who are the partners? XII capital account and Shankar capital account. Okay, how we have to distribute? 16,000 into, okay, here I am calculating 16,000 into profit sharing ratio 5. So 5 by 8. Here 1 8, 2 8s. 2 5s are 10. So 10,000. Then the next person 3. So 2 3s are 6,000. So now 16,000. Okay. Now we have to write the entry here. Okay. Revaluation account debtor. To XII capital account, to Shankar's capital account. Revaluation profit transferred enough. Okay, here 16,000, here 10,000, 6,000. Okay, now we have to prepare the capital accounts. Capital accounts. Okay, are the 3 partners. Three partners, who are they? XII, then Shankar, then Shanmugha. Okay, XII, Shankar, Shanmugha. Okay. So first we have to write the balance. By balance brought down. XII how much? 48,000, 40,000. Okay. Now the new partner Shanmugam, he is bringing capital 12,000, isn't it? So we can write by bank 12,000, who Shanmugam bring. Okay, now that revaluation profit, we have written now one journal entry, revaluation account debtor to partners capital. So by revaluation account For Sai, how much? 10,000. Shankar, 6,000. That's all, isn't it? So we have to find out the balance. Here 58,000. Here 46,000. Here 12,000. So all these will be the balance. Okay, so 2 balance carry down. The same amount. Okay, 58,000, 46,000, 12,000. Write the same amount here down. Okay, 58,000, 46,000, 12,000. Now you write the balance brought down. Okay, by balance brought down. 58,000, 46,000, 12,000. Leave as it is. Okay, with this the problem ends. Okay, we have completed 2 illustrations and 2 exercises. Okay, we will see that next problem in the next class. Okay students, thank you very much.